Yep, it's a market sniper. How are you guys doing? Yes, indeed. You are living in a war environment. It's not something to be enjoyed or to have any glee about, but there is certainly chaos out there at the moment. And let's handle, first of all, the things we were not accurate on in terms of this. We warned we'd be wrong. We'd be 180 degrees wrong, and that was on the gold and on the silver. So overall, we've been saying to you, there is an asset deflationary event. Now you get two kinds of asset deflationary events. You get a financial stroke economic one, where something happens, a bank is going bust, or a government can't pay its sovereign debt, or things of that nature that are deeply economic, and everything deflates. Kind of like 2008, a subprime crisis, everybody's got toxic stuff on the books. And we were looking a little bit that direction in terms of what will happen, which is why we thought the possibility exists that gold and silver might deflate. What you're actually getting is an asset deflationary event. Think when I talk about assets, the S&P, the NASDAQ, Cathy Wood, our friend in high beta tech stocks, Bitcoin, all of these things contracting. But we've got a military version that is a war-specific one. What tends to happen when you have the deflationary event that is military? And we weren't convinced all the time that this would go anywhere. They do a lot of huffing and puffing and threatening and beating of chests, but they don't always start duking it out. When they do, and if they do, and you end up with a military-based response where assets are deflating on war, you get oil continuing up, and you get bid on gold and silver. So that part of it, we were inaccurate. The bid came in on gold and silver. By the way, gold, so we see 2057. Let's handle what we got wrong, because there's actually, believe it or not, we're going to be laying claim to quite a few things that have been right that we've been sharing on this channel. Silver has broken out as well. So by taking out that, we are no longer short. We were stopped out, and in fact, on this return move, we will pivot long. So we don't think that's the end of the move just yet. So what actually has been going on and how and why, and we'll come into that. This is incredible right now, because this our logo of the three circles are just merging into one. To me, this is World Economic Forum globalist based event. I'll talk about that far more than it is a Putin, Russia versus Ukraine, Euro-friendly NATO. That's the cover story. That's the cover story. And that's what you're going to hear from MSM, the cover story. This conflict, in my overall opinion, now that it's been committed and we're going that way, is going to pivot into an infrastructure-based attack. So they'll be attacking each other's grid, power, gas lines, electricity. Nation states will be dumped into the dark, and it won't just be about Russia and Ukraine. This is going to expand, but it's going to expand into a different kind of conflict you've not properly seen. Infrastructure-based, mobile phone network, internet network, you're going to have power down, internet down, lots of things, and then banks, hacking and banks. So this is going to roll into an entire Western bank hack, and we have warned you. Too much fiat in a Western bank, not in physical assets, is going to see you punished. So this is going into my Reset Sniper channel 100% in terms of the topics we typically discuss there. Just before we leave metals, XAG, XAG, this is the multiple between gold and silver, the gold-silver ratio as it's known. That started to have a bit of a down leg. We need to see that turn and come down for our bulls. For silver to start outperforming. But remember, this is a fear trade now, less of an inflation trade. It's a fear trade. Why do we say that? Because gold was running first, and the central banks and the big hedge funds, the people with the big money, buying first. That is going into the fear. So that is all about fear. That's why silver lagged. It becomes a groundswell bull market if silver starts to go up more than gold. Then you should see this ratio go down in a normal environment. So WTI actually put a toe over 100. I think that's going to be a little bit psychological, and I think this could be a psychological possible top in actual fact for oil. So we have been net bullish oil since our single-digit call, and it has been one of the best energies, long energies generally. WTI oil. For me, I think this is a cyclical, well, not cyclical, that's too big a phrase, a medium-term isolated top. I think we go into a bit of deflation ongoing as it goes from a war deflationary event into attacks onto infrastructure and supply chain. And what that means, a lot of people will be consuming a lot less, there'll be a lot of darkness, grid downs, all sorts of things, less consumption, fear. Bank hacks means money being killed. If we are accurate about that, that means much less expenditure. That brings inflation horribly down. So something you need to realize is this has served as the perfect excuse, and we need to actually have a little look at this. In fact, let's go to Twitter feed and a couple of things that that have been said. People, globalists require war with Russia. Western nations are about to, don't forget Putin was part of Klaus Schwab's young leaders. Western nations are about to sabotage their electrical grids and internet and blame it on Russia. The internet is about to go dark. Some of people are onto this, and I gave these options. They don't see, they haven't commented specifically on the aspect surrounding the fact that this serves the ECB, who have tweeted out, we may have to put on the brakes with regards to doing the ECB Fed, for example, put on the brakes. ECB Holtzman, that's the tweet I'm looking for. Sorry, I'm stumbling around a bit. Ukraine conflict may delay stimulus exit. Isn't that absolutely super convenient? So you have a Ponzi scheme. You have a totally hopelessly over-indebted. The thing we keep mentioning is the debt just keeps getting bigger on the way down as the rates get lower and lower. You've had violent changes in the rates and debts. Let's just bring up that 10-year for you. We've got a target to make of 2.17 on the 10-year. But if I just put that on monthly and take it off the short time frame, and I'm highlighting how this is up, the sensitivity to rates gets much, much bigger on smaller moves near the end of this cycle. You can see what a huge capitulation. We called the turn of the bond market there, and we are saying that this needs to go up, but it will never get the chance to go up to the Volcker 80s all times highs up top here, on account that we will fail on debt long before. The system is too fragile because we've loaded up on too much junk food on the way down. We can't run that marathon up at 14%. We die of a heart attack at much sooner, much earlier. And that is the financial system. So the way they are getting out of having to up the rates is, this conflict came. So who'd have thought it? You know, we had all the best intentions of taming the inflation and reducing debt and balance sheets. Garbage, 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 bullshit. We called the bluff. You're not going to do very many interest rates, if any. They were talking about 7. Now, do you still think they're going to be doing 7? Oh, all those investment bankers that were talking tough, we will do 7 rate increases. You can bet how that number's getting adjusted down. Oh, who'd have known? Black Swan event wasn't not so black swan. It was largely predictable in terms of most things. So this is their excuse. Holtzman is busy giving you their excuse as to why they had to do it. And there's the flabbergasted face that you're seeing. What a bunch of... That gives the game away. They can't taper a Ponzi. You can't taper a Ponzi, and now the Russian-Ukrainian conflict is the new reason why that is happening. So that's your bond yield. These yields will still go higher. So on this gold silver, because it turned into a military, we were inaccurate on the direction. We thought it was going to be economic first. It's going to pivot into economic, so the gold and silver markets can still come down. We're seeing it economic from a hacking power grid, a mobile network ability to work even for remote people like us that can travel, that don't need offices, that positioned as the nomads, even that's going to be intervened against because lack of power, because of hacking, because lack of funds from clients, people can't pay things online, etc., etc. There's going to be failure in terms of fresh income coming in for everybody. That is going to be hyper deflationary. But before that happens, we push a little bit higher on the rates and we finish this upside HVF. The other thing we've been saying to you is position to the long side on the dollar. The dollar is going to keep overperforming. You can see who's been bidded up here in this structure that we're talking about. In fact, we've got our first key target at 97.99. We've been giving you and showing you this chart on an ongoing basis for the last 9 months, maybe a year, possibly even 18 months. I don't know. I'd have to look at it. We've been suggesting to you that the Euro USD is generally only down, and people were like, what happened here? You got a big spike. We said the spike will fizzle. We've been updating our community on this almost daily with regards to the bias to dollar strength in this environment, the global currency. We have also given you the Euro-Swiss franc trade. You can see this broadening structure over here, and you can see this sell-off over here. You should have been short with us up top there on the axis at mid 108s, and you are now sitting at 103s. And this is going to have a nasty spiller, a real thriller, all the way from Manila, in our opinion. And that is a broadening structure. You can learn about broadening structures and how we trade them in terms of their role, megaphone in this particular case, on a bear pole via our link. Visit themarketsniper.com. themarketsniper.com, annotation in the notes here. And you can see how and why this is likely to go. But first, it will have a bit of a relief rally now. Now's not the time to charge in. It's actually going to support it, probably relief rally all the way back up to here, before maybe coming back down and then letting go and having it spiller. So there could be a relief rally. It doesn't mean it just goes straight down. People are always too impatient. They don't realize that price behavior is price behavior. We ran a previous low at 105, apart from the capitulation that had never been done. So once you've run that, it's not surprising you had some degree of churn, which is what that represents, in and around that level. It even served as resistance at one point. So that was the Euro-Swiss franc trade, which is continuing to give you ground. We'd also suggested that the USD JPY is going to continue to go up with the dollar dominance. So the whole environment is actually about dollar dominance outside of your precious metal surge that you've had for now, assuming it doesn't become too financial. Remember, the precious metals can still sell off in the paper markets. There will always be premiums on physical if everybody's bank balances gets attacked and they need cash. So it's kind of, we've got to do this. We've got to have cash. We're going to have to sell. We've also given you the USD Korean won. Most of these are just different versions of a lot of the same trade, which is dollar long, but against various others. Inside our community, guys just tapped out, targets made. We've also suggested to you want to be long the dollar against the Hong Kong dollar, which will fail in due course. Separate crisis to go on there. Most of these, as I say, are a lot of dollar dominance trades. Here's your ruble, straight to target. Our guys targeted out on 89, a single wick event when these things come. This HVF was drawn a long time ago. And in fact, it makes up part of an even bigger structure that will see further upside. So you'll see the squeezy over there, which still has an outstanding target. And then you have the wind-up squeezy that you've just seen make target here. And our guys have taken profits over there. This is, and we appeared on Dale, by the way, yesterday morning. This is pre-Putin's hostile intervention, whereas so many browsers open here. We were with Dale on FASCE. I'm not sure why it's called FACE interviews. USD Ruble, Francis's targets up at 89, Dixie to 110. Yeah, he's most negative, the Euro. Francis live from Panama nails the ruble. That was yesterday morning we were talking. It was still pre that wick. It was over here on the daily. So it had triggered, and we said there's more to come. We're expecting a spike surge to the 19 mark. Go and listen to that Geez, I'm jumping around on all these browsers all the time. Go and listen to that one, people. So we've seen some smart takes that were just a little bit light on the economic aspect, but I think are pretty right about Western nations' electric grid. We've done all of this with James Dellingpole on the Delling Pod and on our Odyssey Reset channel. If you're not following our Odyssey Reset channel and everything that we've been discussing there, all of this is coming pretty much to fruition, and exactly as we said. That was pretty smart. This is probably one of the dumbest takes on the Russian-Ukraine crisis. White people doing what white people do, best slaughter other human beings, but sure, let's blame BLM. It takes them all, doesn't it? I think you'll find both Ukrainians and Russians predominantly white. They are not slaughtering others. But anyway, and it's all a globalist agenda. Anyway, so what else has been happening? So we've suggested... sorry about this, guys. So many. We've suggested they all look the same, the TradingView browsers. We suggested that you wanted to be short and that you should stay out of crypto. So let's do a super quick fly past. We have the Crypto Sniper. Follow that channel. We do specific coverage, but you will see that Bitcoin is now down at 35. We've been saying all this period, you've got to be out. You've got to be defensive. Post that spill and that rally up at 51, we got out of everything on Bitcoin. Everyone was calling a bottom there. They then called a bottom there at 42. They then called a bottom here, and I'm afraid they've come back down again. It's not at the lows, and what I imagine, for those of you that have some interest on the cryptos, you could see another continuation form, and then we have interesting times. Could it be down? I would bias to down. Is it possible if we lost all money and power, it could go very far down? Hey, if you want to run blockchain, it relies on power and internet. That's the end of the game. You don't have power and you don't have internet. Lots of people can't participate. They go medieval. They want cash and gold. And that's kind of how things go. However, if most places still have power and blockchain and it's just banks that are down, then it's not beyond the realms of possibility. You could get a bid under it. But my suggestion is first it goes down, only to go up later as the central bank digital tokens and order is restored for your future metaverse, where you will own nothing and be high on opiates provided by the big pharmaceutical complex. So what else have we got for you that was happening? So we suggested that bonds are going to go down in value, yields up. That is continuing to happen. We've suggested to you that you should be out of risk on assets. That's not just crypto. It is also the stinky stoink market. So we'll show you what's been going on in the Dow and various other things. We did yesterday, we pointed out this head and shoulder. Well, that head and shoulder has moved on. We were discussing it here inside the community, and then over here at the triggering point, and now you're already a third of the way to making this. It could go further. Just interesting for those that like a little bit of Elliott. If you were to take, let's put the magnet on and throw out a quick draw, an Elliottician target, might suggest that you would go 1.618. So that length again to there, that represents 1.618 would be the third leg. So typically the third leg, so let's just highlight this, leg 1, the third leg after the rally is usually the biggest. That would take you to 29s. Then you get a rally for a 5. Let's just say you went back there, and then you get another 1. Typically back down. So this is your juiciest leg. So there might be more to come before you rally. You might go to 29. Don't be too quick to chase in. There will be when things fall, there's fearsome rallies. You could get all the way back to neckline rally. So a wait on the order there could serve you exceedingly well, and then you could go down to there. That could be a great trade if you were patient. If it happened, it doesn't mean it will happen. It could happen. So that's, as I say, A, B leg, B, C, which goes to there, and then you could have the real long leg. So that's still possibly in the mix, and that will come on. Horrible news. Your purveyors of fear have finished largely for now with the pandemic version of fear, and now they are doing your sons and grandchildren will die on the battlefields of Europe again for a new generation. That was what was being tweeted. This is all drama and fear. Let's just go in there and show you, find that one. I think it was over here. If Russia puts boot steps into NATO territory, we're all at war. Retired general warns Britain's children and grandchildren will be called to fight if Putin advances across Europe. Note the fear, the drama. You get all these hype merchants. Whenever there's chaos and confusion and people are not sure or not clear on what's going on, and they're managing and stampeding the herd, there's lots of plank clapping and lots of firecrackers being let off and a lot of confusion and chaos being encouraged. And retired generals show up. These are usually dark state operatives that still play some role as advisors and old heads and hands as, unofficial pension pots and big expansion slush funds that they can dip into to show up and throw up these hair-raising predictions. This is to have you thinking your son and your grandchild is going to be slaughtered on that you just visualize the graves of World War II, the landings on Normandy. This is to bring out horrible fear-based mental framing that puts you in a lower energy. Your job is to absolutely laugh your head off at this hyperdrama. Whether it is to happen or not, you have very little control about it. Your job is to recognize that which you do control and those things that you don't. And that is not something you control. And you should recognize that as fear-mongering of the highest order. Kathy's ARC got a little bit of a rally on a gap close. I wouldn't touch it with a barge pole in this environment. It's fallen very far, very hard, and I think it has further to go. It made its 1.618, which is the move from the first sell leg down to there, the rally projected down. So these are other reasons why. A little bit of a hammer there. You might get a little bit of a bounce. I would quite happily take shorts for further downside on her. I don't think this is over yet, but you never know. I don't think the music stops suddenly. I think there won't be too much of a physical war. I think in terms of soldiers shooting at soldiers, but I think bombs on infrastructure, power, electricity, grid and infrastructure, supply chain, and then cyber hacking is going to, you're going to watch the narrative pivot from, shrapnel and bullets to more cyber-orientated World Economic Forum agenda. What else is going on that we've spoken of? It's just like all our trades are making phenomenal progress now. USD Tri, we were talking about it in the community. We're expecting a little bump. That bumped up to its target basically on a smaller time frame. There was a short time frame. This is on the dollar push. You go jump perfectly out. There's so many little things that we hear. It's curious to see what's happening with the rand, but the dollar's getting the bid, so generally that's going to be happening. The dollar strength serves you. If you get the macro right, the dollar strength will keep serving you. The debt markets, you go to a British debt market, these are going to continue to go up in yield and down in value. Debt has to go down. That's the Italian market. Boy, oh boy, there's going to be mamma mia problems out there. This is the US 1 year. Let's just show you the daily there and pull that out. That guy has turned in terms of being very close to zero to being north. So debt, higher yields. How did the Dow Jones go? Dow Jones is looking sick as a canary. Broadening structure, we highlighted that. As I've already said, learn about that and more through our community and how we utilize them. But there you go. To your splitter, perfect. Test up and down. And I would argue that the biggest, longest leg could still be out to come, but you've just had a gap there. Very interesting on the gap. The war announcement is the gap. There's a couple of ways you can do things there. You'll learn a couple of tricks from us, but you could do one of two things. Put the 50%, listen to this free trick. Put the 50% through the middle of the gap. It's the longest, hardest point. The fastest point in the capitulation is usually where you have the gap. You put the 50% of the fib in the middle of that gap, and it will project to you where the next likely rest point is. So you make that, and then you will have some form of a rally. That gives you 3104. You wouldn't have heard that one before, and it's very powerful and it works. We teach this, and we remind our community of this all the time. Think of how many things you are not learning about trading in this market, and what you should be doing. Also, we can do that fib extension again, a work for everybody. 1, 2, and then let's keep it on the top there so we can pull it across. So that'll be 1 unit, 61.8. You note how those two things confluence. The other one was 30,000 and a few hundred over there, and this is the 1.618. So you could run that 30,000 odd zone. Is looking like a rest point for this, but you could first get a bit of an attempted rally because of the gap initially, but then I think you'll spill harder as new news of new opening fronts, and I expect those fronts to be less about conventional warfare and more of them about attacks targeted at infrastructure that paralyzes power, grid, telephony, mobile network, and also cyber work. And most of this will be your friends in Israel that have been practicing for the cyber attack and drilling like hell, and it'll all come raining down upon you with the access of the Zion axis in America, the captured European, and the banking cartel. Then suddenly having, oh, whoopsie, we lost all your digits in your computer. So watch out for that little scam that they'll be visiting on you, and they'll be telling you, we couldn't do anything about it. It was the Russians. They're going to nation state divide these crimes. And of course it's all false flag. Most things here are co-opted accesses and moves and attacks that are being perpetuated against us. How's the big boys of tech doing? Again, we said you should de-risk, but you can see that Apple is having a little bit of a trying to rally after a nasty gap open. You can see these were great take profits in the big boys of tech. Schmoogle, the great Satan, do no evil, just plenty of it. Yeah, not so bad. Microsoft traded up on a nasty gap down, so the American market's gap down, and crazy as it is, but the high yield debt that we warned is junk and should have fallen and started its journey in March of 2020, and then the Fed stood behind it and reflated it right the way back up. It never invalidated on macro inverted HVF. It still hasn't really let go. It still hasn't really let go. Junk debt should be virtually near zero right now. And that is proof of your Ponzi scheme, if nothing else is, because this is high yield debt in a very, very difficult environment. The strugglers of tech like Facebook, Netflix, this is not bottoming, guys. There's more to come. For this type of price behavior, in our opinion. So TLT, we said that this is a head and shoulder reversal, and that was the slap in face event, that was the March of 2020 events, and that this would roll over to the downside when everyone was buy the damn dip in bonds. It's never ending. The trend will last forever. Calling the end to a 40+ year trend. And we were accurate there in our opinion. It came down to the shoulder. You'll get minor rallies at some point, but you will break down. Debt is the next thing that you should be short if you know how to short, but most people don't know how to short. We're not here to teach you on a YouTube channel. You need to understand the principles, and for that you need HVF method. And without it, I wouldn't know how I would even go about the markets in that way. Okay, so that was a gold update. That was a silver update. We had a look at the dollar index strength. We had a look at the euro weakness in the currencies section. We showed you that Bitcoin has struggled. And that it was the right thing to get out of, including the altcoin HEX. We've showed you the equities. Risking off was the right scenario. Preparing for a deflationary event was the right behavior in all aspects. It was a slightly different one in that it went military, where we thought it would go economic. So instead of getting everything down, The oils, we did show you the oils. The oils had a pop. I think that is going to be localized highs there because there's been a build-up in oil for a sustained period. And in actual fact, short, maybe medium-term shorts on oil will pay really well. Those markets are backwardized very strongly. Backwardization is the concept where the contracts into the future months are very high differential in yield to the current spot market. And generally when you get extreme backwardization, you get a correction to the downside. Okay, so I wouldn't chase in long on the oils. In fact, small technical shorts on that space could in fact serve you very well if you know what you're doing and how to do money management and stock placement. Okay guys, I've got to let you go. Thank you very much for checking in. Don't forget, links below. Buy your gold, pure gold. If you aren't in gold, you should be net investing in gold, pure gold. Get silver and gold. Links below. You also can get your cashback card through crypto.com. You can buy internet gold where you can have numbered bars that are solely reserved for you as well, or you can have pooled bars you can choose for extra cost, and later you can sell those to buy physical if you want to build up an amount to a certain level. That is on Bullion Vault. That is also below. Okay, and of course, book a call via themarketsniper.com. Go visit we have new testimonials up there. Go and have a little look of people that are successfully building their wealth and protecting their wealth during reset times. Thank you for watching.